Today, we're breaking down a pretty bold and honestly incredibly controversial proposal aimed at tackling the housing crisis, the 50-year mortgage. It's an idea that promises some immediate relief, but as we'll see, it might come with a absolutely staggering long-term cost. Okay, let's get into it.
So right off the bat, the stage for this whole debate is being set with some pretty serious historical drama. The proposal is being compared directly to FDR's creation of the 30-year mortgage back during the Great Depression. And you know, that policy completely reshaped American homeownership. So the stakes here are being framed as nothing less than revolutionary.
But why such a dramatic idea right now? Well, it all comes down to this number, 38%. That's the average slice of a homebuyer's monthly income that now goes just to their mortgage payment. That is a huge level of financial strain that has basically priced millions and millions of people right out of the market.
So what exactly is the big idea here? It's actually pretty simple. The plan is to extend the standard home loan from 30 years all the way out to 50. And the goal, of course, is to make owning a home more accessible by lowering that massive monthly payment that is just crushing so many family budgets.
And that leads us right to the single biggest selling point of this whole plan, the immediate promise of affordability. For families who are struggling to even qualify for a loan, the idea of a lower monthly bill, well, it sounds incredibly powerful.
Let's put some actual numbers to this. On a pretty typical $300,000 loan, a 50-year mortgage could drop your monthly payment by about $163. Now, that might not sound like a life-changing fortune, but for a family on a really tight budget, that's your groceries, that's the gas bill. For a lot of people, that could be the difference between getting a home and being a renter for life.
Okay, so lower payments. Sounds great, but there has to be a catch, right? What is the hidden long-term price you pay for stretching that debt out for an extra 20 years? This is where the debate gets really heated.
And here it is. The hidden cost is it's mind-blowing. On a $400,000 loan, you would end up paying over $1.2 million in interest with a 50-year mortgage. That's almost $700,000 more than a standard 30-year loan. Let that sink in. You are paying more than 3 times the original loan amount just in interest.
And this chart just perfectly illustrates the other huge problem, something economists are calling equity starvation. You know, home equity is the #1 way that middle-class families in America build wealth. But just look at the difference here. That bar for the 50-year loan is tiny. You're building wealth at a glacial pace. After a whole decade of making payments, you've barely made a dent, which leaves you really financially vulnerable.
One analyst put it perfectly, calling this trade-off a Faustian bargain. It's like you're getting that short-term relief, but in exchange for what could be a lifetime of debt. So the big question is this a real solution, or is it something that just preys on the desperation of a generation that just wants a piece of the American dream? As you can imagine, this whole thing has kicked off a fierce debate. We're not just talking about numbers anymore. We're talking about what kind of future we want to build. And what's really fascinating here is that the criticism isn't just coming from one side of the political aisle. It's coming from everywhere. On one side, you have the administration's own housing chief, Bill Polta, calling it a complete game changer. The official argument is that this is a vital, innovative tool to help a new generation get into a home in what is just a brutal market.
But then you get this incredibly sharp criticism from a typically strong political ally, Representative Marjorie Taylor Greene. She's arguing that the plan doesn't help families at all, it just rewards the banks with decades of extra interest and traps Americans in debt forever. I mean, that kind of friendly fire from within the same party is really unusual, and it shows you just how divisive this idea truly is.
So, to kind of sum up what most of the experts are saying against the plan, they argue it would just pour gasoline on the fire. It would boost demand without doing anything to increase the supply of houses, which could actually drive prices even higher. It creates what they call a retirement time bomb. I mean, can you imagine being 80 years old and still having a mortgage? And at the end of the day, it's just a massive transfer of wealth from regular homeowners to the banks.
So if this idea is out there, why don't we already have 50-year mortgages everywhere? Well, it turns out there's a pretty big legal roadblock that was put in place for a very specific reason. And that roadblock is called the Qualified Mortgage, or QM, rule. Now, this was a key part of the Dodd-Frank Act, which was created right after the 2008 financial crisis. The whole point was to prevent that kind of disaster from happening again by making some of those super risky, exotic loans illegal. Capping loans at 30 years was basically a firewall to make sure people could actually afford to pay their debts back. To make 50-year loans a thing, you'd have to tear down one of the main safeguards we built to prevent another housing collapse.
And this leads critics to ask a pretty obvious question. Instead of this crazy plan, why not just focus on the real root causes of the problem? Experts have a bunch of other ideas, like reforming zoning laws so we can build more homes, dealing with huge corporations buying up single-family houses, or focusing on things like down payment assistance and wage growth to close that gap the old-fashioned way.
So, it all brings us back to that central question. Is the 50-year mortgage a form of deliverance for a generation that's totally locked out of the housing market, or is it just a newer, maybe even more dangerous kind of debt?
And that really leaves us with this one final thought. Is a society where people need half a century, 50 years, to pay for a home a sign of progress? Or is it a glaring testament to a massive policy failure? The answer to that, well, that's the multi-trillion-dollar question we're all going to have to face.